Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark gives us the latest from the major equity markets and what's been trending. Publisher of the Dines letter, Mr. James Dines, gives us his thoughts on Trump and trade and what shocking thing Trump might do about the massive U.S. deficit. He talks about what the equity, gold, and silver markets might do and how you can protect yourself from a sudden drop in equities. He also thinks billionaires will start snapping up mineral mines the way foreign investors bought up homes in Vancouver and London. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Cypress development consultant Don Mosher. We'll talk to Ross Clark right after this.
Glance Technologies owns and operates GlancePay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Chartworks CEO Ross Clark. Welcome back to the show, Ross.
Always enjoy it.
The Canadian dollar seems to be taking a pounding. What's behind that?
Well, you know, this is the one currency that just can't seem to get a lift. Here we've got the crude oil price back up over 62 and a quarter. You got lumber prices holding in reasonably well. You know, we can't move our oil out of the country, so we're not getting a decent price for it. And the bottom line, I guess also, you know, with the potentials as far as tariffs are concerned, even though we do have a trade surplus with the U.S., the fact is that, this dollar is one of the weakest ones out there. We had a good oversold reading about a week and a half ago. We got a 4-day rally out of it. It was just 1 cent, and it ideally, I mean, it's easily been a 2-cent rally just to get rid of the oversold, but didn't even have that much in it. So here we are at 76.39, new low for the move, and I don't see any reason why it should be doing any better than this. Clearly, when we see a negative divergence, that's when the currency cannot perform well with commodities. Easiest path is the one to the downside. So, you know, in the next, few weeks or months, we'll start to look for the opposite side of that equation, where the dollar starts to hold. But it's not there right now. Interest rate differentials are not helping. You're going to have U.S. is going to raise rates next week. We'll get a 2-day Federal Open Market Committee meeting with the Fed, and it'll be the first of what will probably be another 3 or 4 rate hikes this year. Canada versus U.S., you still want to be long Canada or long U.S.
How desperate are they to get oil sands product out of North America?
Well, for Canada, I mean, clearly this week they managed to get a trainload of oil out of Portland, Oregon. So if you can't do it through BC, then you look to where else you can, and to get it to the Pacific, they've got no problem getting it south down to the Gulf. But now they clearly are looking for an alternative on the West Coast, and looks as though Portland right now is possibly in the running. And, here it was this week. I think you've got more and more problems trying to get things done with the Trans Mountain Pipeline, the construction here. Delays just seem to be never ending.
Gold and silver, what's the outlook there?
Well, here's one where we've had a weak U.S. dollar for the better part of a year. And the gold market just has not been able to get a decent bid. There's at 1360 and then 1350 levels have been big overhead resistance. And with the weakness in the dollar, gold should have been capable of popping through if it really was ready to go. And I still think that this 8-year cycle bottom is still in the process of forming, but it needs one more clean out. This week saw one of the, pretty much the lowest closes of the year in both silver and gold. We're down around 13.12 on the gold price. The modeling that we've got really is setting up for a nice low, but the best thing that can happen is a good clean out. And I'd love to see it break by $20 or $30 below 1,300. That could set up some of the technicals that we're looking for, and we will bring people up to date when that happens.
Has money that would have gone into gold and silver been siphoned off by the cryptocurrencies?
Well, for the cryptos were the hottest item on that perspective into December. Got a rebound a couple of weeks ago to what was a good resistance. Now they've had a decent sell-off. They've been back down retesting the February lows. And as of Friday, got some buy signals here. The Bitcoin Investment Trust, Riot, and Hive, probably a few of the others, have got good oversold short-term signals, and now they've got a reversal to the upside. So there's a reasonable chance that the lows we put in this week should become interim lows. And we did a piece on these last weekend, and again at the end of the week. This is a very important spot for us. Technically, as we move through the next couple of months, there are some very, very key levels that we will be watching for, but you need to see a decent bounce from what we saw on Friday.
If people want to get more information from you and ChartWorks, how can they do that?
Just contact me directly at ross.clark@chartworks.ca.
Anything in particular people should know about ChartWorks?
Well, we look for exception, opportunities in markets. We're basically looking for excesses on the shorter long term. Typically I'm looking for trades that will last anywhere from probably 2 months to maybe 6 months. That's the time frame that I like to do with the cyclic work that I have. And when we get into trending phases, we'll buy in corrections and uptrends and sell the rallies and the downtrends.
Ross, thanks for the update.
You're welcome, Jim.
My guest has been Ross Clark, CEO of ChartWorks. Coming up, Mr. James Dines, next on This Week in Money.
Always consult your investment professional before making any investment decision.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abnresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Mr. James Dines. He's the founder of the Dines Letter, which you can find online at dinesletter.com. He's speaking to us from San Francisco. Welcome back to This Week in Money.
Thank you. Glad to be here.
How come when you've been so optimistic you're the original pot bug in America, the original Bitcoin, and then blockchain bug, why have you been calling yourself the original bond super bear?
That's a good question. We're still waiting. First of all, those three areas have come down hard, and with them, we're still waiting for the renewed buy signals on them. But those very steep declines in Bitcoin and the blockchain and pot have been together. They mean something important. And many other leading stocks, for example, have turned flat recently, and is hidden by the daring rise by Amazon, makes almost daily new highs, and a few others. And there's something going on in the market. I think one of the secrets starts in the bond market, and it's too often ignored by beginners. But several things. First, I'm not only bearish on bonds, I'm the original bond super bear. And I think they're at the dawn of a crash. Bonds have since we became that bear, bonds have already soared, which of course their yield goes in opposite directions. So the yield has soared from 1% to nearly 3%, which suggests that a number of things, that real estate, for example, is going to head lower due to higher mortgage rates. Also, next, look at the Dow Jones Transport Average. It's depressed, and the Dow Jones Utility Average is actually back down to what it was a couple of years ago. In fact, the whole income sector is weaker, and that's the result of bond yields having already risen enough to compete with stock yields around 3%. This is a bearish factor for all investors who own stocks chosen for income. What's going to happen next is another story. I could go into that if you want. Second, the impact of bonds dropping is already felt by big bondholders such as institutions, weakening their balance sheets, but also governments worldwide that hold U.S. Treasury bonds to back their own currencies, including Canada. So currencies worldwide are going to be shakier. And for example, also China and Japan have trillions, literally, of dollars in U.S. treasuries, and the drops that they have already occurred in what they had thought were ultra safe investments might trigger some of their prudent selling, which would again aggravate the downside pressure of U.S. treasuries. Not to mention China and Japan's geopolitical fury at a 10 or 20 loss on a few $1 trillion. But there's also a third consideration, and that's what's going to happen when the current bonds mature and need to be replaced, which of course are going to be at higher interest rates. And I can assure you that I have found nowhere in the world anybody mentioning how this is going to be busting budgets of governments. They're not figuring on interest payments, which have been zero for 6 or 7 years. And in fact, that's another whole topic. And this has just not been planned for. I can come back to that also if you want. And China's growth, it's already showing up. China's growth rate has lost money in the last quarter. It's been the largest. China's growth rate had the largest decline since 2011 in the last quarter. Debts of all kinds are already at sky-high levels. Personal, government, student, automotive, and I've been predicting junk bonds would lead the way down, which has clearly begun. If you look at a chart of junk bonds, my staff has been charting these bonds daily for decades, and I'm telling you, there's a chart of it in the last Dines letter. You can see the clear rise on point and figure really shows it clearly. There's a sharp rise going back a few decades, a lateral motion for some years, and suddenly a downside breakout. Now, something's going to break here with this kind of tension set up. Bonds have been a safe haven for years, but as lawsons I've mentioned become recognized, some of these people are going to be doing some selling, and where will those funds go next? There are no other bullish safe havens except growth stocks, and yep, they're growing up. NASDAQ is making new highs still, but they're getting very overowned. In fact, somebody was recommending just the other day, or suggesting the other day, that Amazon would wind up as the first $1 trillion company. And the question is, where is this money going to flow? If you want to make money in the stock market, you have to drink upstream from the herd. You have to go where people are going to go, not after they've been there. And the only haven area left that I'm aware of is gold and silver. And the Dines Wolfpack theory, we call it DUPAT, it says that a group of similar economic fundamentals tend to move together. For example, when utilities move, they all tend to move. Anyway, getting back to gold and silver, platinum and palladium are in the same group, and they have been soaring. And we have been very bullish on those, except we just turned bullish. We just flashed a sell signal on one of those two. But the question is, what about golds and silvers? And they had a tremendous rally in 2016 and then turned flat, and they've been flat as a horizon ever since. And I think that they're completely underowned, and they're so people look at them as so boring that they won't touch them. But that's exactly the kind of bottom I've seen so many times in previous bull markets starting in gold, and that's exactly the time to buy them, because they are still underpriced relative to the rest of the market. And once these golds move, I mean, all the funds have ferrets running them in these days, and they'll be jumping on these golds and silvers. There's no bull market like a gold bull market. And once these big funds start taking money out of other things and pushing it into the precious metals, I think you're going to see an upside explosion, I should say, in the gold and silver areas. The one thing I'd like to also point out too, on a super strategic upper level view, is the fact that bonds have just come from 7 years at near the zero level, paying interest. And not only that, they've actually gotten below zero to what they are calling negative interest rates. And I've read Sidney Homer's book of 2,000 years history of interest rates, and stayed awake for a lot of it. And I tell you, there has never before been a time in human history where you had to pay somebody to lend them money. If somebody asked you to lend them some money and then asked you to pay them, would you do it? I mean, wouldn't you want a little bit of interest? That's why they use the word interest. And I think this reflects something very profound. I think this is going to be looked back on as like the tulip mania in 1636, where people paid so much for a tulip bulb that it became the poster child for folly. And I can tell you that people are going to say later, and for centuries to come, that people actually paid you to borrow money. They're going to laugh. I think it means something in mass psychology, and one of my $6 is on mass psychology, and I'm telling you, this has great meaning. And I think that we're going to see a special kind of bond decline in terms of how deep that decline could go. I think we might see interest rates that you wouldn't believe. I mean, don't forget, this bond bull market started down when interest rates were about 15. U.S. government treasury bonds yielded 15%. It could certainly challenge that and maybe go higher. So, once mass fear gets injected into a crowd, it can run further than anybody might expect. So, I think it's an astounding situation with all this history of people so accustomed to getting these low interest rates that the banks don't pay. Banks used to actually pay you to leave money there. You used to get whatever it was, 3%, sometimes 1%, sometimes 6%. But to get nothing, I think that really, you need to sit back and I do anyway, and reflect on the mass psychology of what's going on in the world. And, of course, there's a big geopolitical situation going on. Many things are becoming uniform, like strongmen taking positions in countries. It's happened in the Philippines. China's Mr. Xi has just announced that he's going to be president for life, following Mao and Chairman Zhou Enlai, and everywhere. It's in Hungary, it's in Poland, that we're getting very strong dictatorial leaders, and furthermore, it looks to me as if there's a war coming. Everybody is rearming. Go back and look at your history. People don't read history anymore, but I do. I love history, and because it teaches you what humans did before, and we're all the same. All humans are the same, and we tend to repeat, although maybe with Elliott alternations, but still, you have this situation where people are just pouring billions into new weapons, and incredible new weapons, not just poison gases, but a new rocket that in 1 hour could deliver a missile to anywhere on the planet with the running at the speed of a missile from of a meteor from outer space, and there's no way to defend against that, and it's a trigger ready situation, and there are very few places that are left to invest. I've been taking my subscribers into defense stocks. They call it defense, which is actually military stocks. It's a nice palliative, but you take a look at a chart of Lockheed or Boeing or any of these armament stocks, and I hope there's no war, but anyway, I hope it's not a plan, and we need to consider that there's a war coming. How bad it'll get, who knows? Anyway, these things are all say to me that this market is on thin ice, and I think that, boy, if you don't have some gold and silver in your portfolio, I think you might regret it later.
We'll have more with Mr. James Dines next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Mr. James Dines, the founder of the Dines Letter, online at dinesletter.com. He's speaking to us from the glorious city of San Francisco. Mr. Dines, given what you've talked about already, how does a person make money in this kind of market?
You know, there are times in the market where you need to be patient and wait for timing. And once timing happens, you need to strike quickly. I think that this is a high-risk market. You know, you're coming late to the party. And if you're going to buy anything, I would stick with high-growth stocks. And I already mentioned Amazon. That's one of the greatest companies in the world. I was the first one on Wall Street to recommend it in 1995 when I turned bullish on the internet stocks, and it was at $5, and it's a little higher now. And but it's all timing. And I think what you need to do is, first of all, as I've already said, I would get into some golds and silvers. Second, I would also take a look at some of the Chinese stocks. Alibaba and Tencent have had phenomenal runs, and I think it's kind of late. I mean, they might go further, but if you're a trader, that would be something to look at. But I would say generally, I would develop some cash. You know, rich or poor, whether you're rich or poor, it's good to have a lot of cash. And wait for either a big sell-off. We flashed in the Dines letter. You probably saw it in my newsletter, Jim. We flashed a sell signal a couple of weeks ago within 2 days of the top. And we had a very steep decline, which people have already forgotten. I haven't. And at the bottom of it, we sent an interim warning bulletin looking for a rally that would not make a new high. And what's happened since then is we've had a rally, and none of the leading averages have made new highs, with the exception of NASDAQ. And they might yet do it, but, you know, you can always go back in if you have cash, but I think this is a good time to wait for the next sell signal to expire and then be replaced by a new buy signal flashed by me. Meanwhile, I would start accumulating some golds and silvers as a hedge, and if they have upside breakouts, I'm going to be jumping on that with one of my interim warning bulletin signals we would flash, and which particular stock to buy. I would say that I'm not going to give you very many stocks to recommend because I'm not out of respect to my subscribers. But you might want to take a look at a stock. Just check the chart of a stock called Midas, and I think those are the areas to do some mining. Also, the large mining giants, you know, some of the stocks like, there are various ones we recommend in the letter, and Freeport McMoran, I'll give you that one. But there are a number of them that are very bullish uptrends and still not still have not had the public exposure because they're too focused on the ones that have already gone up a great deal.
Are junior miners among the recommendations, or are they really hard to pick?
No, we specialize in them. I recommended Agnico Eagle at $2 originally when I was a friend of Paul Penna. So I love Canadian low line. I just mentioned Midas. That's a low price stock.
Given the Trump tax breaks, are they already factored into the market, or could they provide even more company profits?
I think that's already been factored into the market. Don't forget, the minute he got elected, it was a big surprise. The next morning, there was an upside explosion, figuratively, in terms of the leading averages. They went vertical, and I think they realized they had a capitalist in the White House for the first time ever, and I think that's included. And he's been talking about, he's been talking about these things all the way in since he got into. He's been talking about these since he got into office. He's been, even when he ran for office, he was talking about tax cuts. This is a guy who says he's going to do something. He's going to do it, and if you block him, he's going to turn around. I mean, I'm not going to say plus or minus, but whether it's good or bad, but because this is not a political letter, it's a letter strictly trying to lead people to profit. And I think that when he says something, he means it. You need to pay attention, because he'll try again and again until he batters it down. Remember, he was blocked several times from this tax cut. But he eventually got his way, and he's going to go back and get it. He's going to go through the next election and try to get a larger majority in the House of Representatives and push it again. And this time it might be even easier, depending on what happens by 2020. But there's an election coming up here at the end of the year, and that'll be our midterms, and quite a few seats are coming up for challenges in both the House and Congress, both the House and the Senate. And so I think, as the tax cuts are factored in, I think the next thing is he going to lose the election? That's going to be, and that might cause a bear market.
Well, we see Rex Tillerson out as Secretary of State and CIA Director Mike Pompeo put in his place. Does that reflect a change in U.S. trade policy?
That's a good question. Tillerson is a very smart guy. I mean, he did a brilliant job over at Exxon, whether you agree with him or not. He was, but he's got his own mind, and one thing about Trump, whether you like him or not, he claims that he wants different views around him to compete so that he can examine every consideration. But the truth is, I find him very defensive, and he doesn't really like to have people disagree with him. And Tillerson actually called him a moron, and he refused to recant it. So I'm sure that's stuck in Trump's craw. And you need to be careful of criticizing Trump. He just keeps on putting people in there who are obedient rather than challenging. And so I don't think that there'll be any change in the tax policy. I think whatever you thought about Trump is what you're going to still get.
Do you believe the Trump administration favors a weak dollar or a strong dollar?
I don't think Trump knows enough about it to really answer that. He's very patriotic, so on one level he favors a strong dollar, but as an aggressive capitalist, he also favors weakening the currency, because so many other countries have done that to America. I mean, Japan got rich underselling America. It took our steel and automobile industries away, and it's now a game that everybody is playing. Look, I became the original gold bug when gold was at $35, and I was outraged when they severed the price of. I was outraged when they cut the link between gold and paper money in America, and at that point I wrote my book, The Invisible Crash, and warned that it would lead to uncontrollable debts, because there's no limit on politicians spending to get themselves reelected, and it's actually happened exactly that way. And I think what's happened now is these government debts are unpayable on every level. I mean, they come in from from not only governments but also banks are overextended. People are overextended with debt in their homes and student loans and auto loans, and I think that there's some kind of a shakeout coming here. I can just sense it, and I don't like the way the income-sensitive stocks have been weak, and it might be later than we think.
If there's going to be some kind of shakeout, could you see governments one day just saying all debts that are owed are canceled, we're starting from ground zero?
Actually, something like that came up. It was a very brief mention. Trump, see, you've got to listen very carefully to this guy. During the campaign, somebody asked him about debts, and he said, debt is no problem. And they said, what do you mean? He says, well, we can always offer 70 cents on the dollar on government bonds. And you might remember that really shook the bond markets for a couple of hours until he came on and he said it's not being considered. But that's what he does. I mean, you should see, study him. He said several times that he's quite capable. Well, he's very capable of getting rid of debt. He said several times he's been through debt in his career, and he's just gone in and say, "Will you take 70 cents on the dollar? And if not, you can go sue me." So, yeah, I don't think he'll cancel a debt, but I think if push came to shove, I think he'd take a chunk off it. Whether you believe the unbelievable or not, I think that's probably what's going to have to do. These debts are unpayable. There's no way America can pay off $20 trillion. I mean, get real. They can't even balance the budget, much less get a surplus large enough. And where are they going to get a surplus from? I mean, the other countries of the world are going to go to deficit so America can pay off its debt. What about their debts? No, there's no way back on this. There's, I remember when I was, when I became the original gold bug at $35 and silver at 92.5 cents. All this stuff was clear to me. That's why I started the Dines letter. Is to have a voice, because nobody else would say these things. And I started gold seminars to explain it, because people couldn't grasp why gold had to go up when the government swore they would never allow it. And they became financial seminars eventually, and that's become a whole industry now. But I've seen a lot of things happen in my time, and even though I'm only 29 years old, I mean, that's a bid and no ask.
29 plus shipping, handling, and sales tax.
Yeah.
We'll have more with Mr. James Dines next on This Week in Money.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYP.V, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Mr. James Dines, founder of the Dines Letter, online at dinesletter.com. He's speaking to us from San Francisco. Mr. Dines, with the expanding electric vehicle market, are we going to see shortages in cobalt and lithium?
That's another good question. The world is now developing a new form of the world is now forming a new shade of capitalism. When you ask about Tillerson leaving and also Cohen left, these guys are free traders. They don't believe in tariffs or any limits to free trade. I think that age is over. You know, in America, we have an antitrust situation. If you have too much of a large market, the government's going to bust you up or prevent you from acquiring other companies. But now we're getting into an era where countries are calling these big companies national champions. China is doing that, and also Canada has done that in the past. When there's a big company and they don't want the foreigners to own it, they simply block it. I think that on a deeper level, I'm also looking for a change in capitalism to something different. I don't have a word for it yet myself, but I'm still thinking it out. But to me, raw materials are going to be the ultimate asset on this planet. It might be after our time, but sooner or later, you know, we're going to be here for a long time, and we're already closing some zinc mines, and there are shortages. And there was a scare about oil being in shortage for a while until they've learned how to wring out more from shale. And I think China already recognizes this. I don't know the name of the guy they have in charge of it, but he's smart as hell, and he's already starting to build up ownership of mines. And what they're doing is they're buying mines anywhere they can buy them, and they don't really care whether they're profitable or not. Look, they've got $3 trillion in Forex to spend. They haven't subtracted the losses in the treasury holdings yet, but they think they have unlimited money. So they're just buying mines and parking it. They're buying large quantities of cobalt and stacking it in a desert somewhere. And rare earths, they already stole that from America. I screamed bloody murder when it happened, but I couldn't stop it. Now China produces 94% or more of the world's rare earths, and people don't know what they are. But you can't have a missile without some of these rare earths, dysprosium and all the rest of them. And I think that once it dawns on people that the planet is limited and that China and eventually others are going to be buying mines just to own them, and the way, for example, that many people buy flats in London and don't use them. They leave it in case they're forced out of their own country and they've got a place to live. There are whole streets in London of expensive homes that are dark all year because they're being held in reserve. And I think that's going to happen to mining. Is a revolution coming in this area. And I think you're going to see sky-high prices. I mean, how much are they going to pay for copper when the main copper mines are getting depleted? Once the scare starts and the final stampede begins, it'll be mass psychology in action. And I think that you might already be getting some of it, but now, on the other hand, I think that there are large areas of the earth that have not really been fully discovered. I mean, don't forget, cobalt is relatively new to hold a major position in Africa. And who thought cobalt would be in Africa a major factor in world production? I think Africa is loaded with all kinds of undiscovered elements. I think that Siberia, with the global warming, is going to have all kinds of stuff to be found under the ice packs. So I think it might be a long time before it happens, but the Chinese are very long-term thinkers, and I think they'll be buying everything they can get from Russia. So I think there are very big changes that I envision, and I write about in my books and my newsletter. Jim?
Well, I was just going to ask, with climate change, Canada's north is being uncovered from all that ice as well. Is that a great potential?
Absolutely. I think that there's plenty of stuff up there. I mean, Canada, let's face it, has been noted for its wonderful oil shipped to America in the 20th century. That's where our oil came from Canada and Saudi Arabia and Texas. And I think that there is untold wealth up there. I think Alaska is going to be a very big bet. I think the Russians are going to be very sorry they sold Alaska to America for $7 million, payable in gold, and by the Tsar, which was one of the greatest swindles in history. And Seward, the Secretary of the Treasury at the time in America, who perpetrated that brilliant masterpiece, was criticized brutally for it at the time. They called it Seward's icebox. An icebox is what became refrigerators. So I think that whole area, I think Antarctica, I think is going to be a treasure trove. However, that's not going to be divvied up, I don't think. Yeah, I think there's a lot going to be going on, and so there will be new sources, but some areas will simply not be covered, and it's just going to be like the game of Monopoly, where if you build a hotel on one of those places, when you land on it, you're going to pay. And if you want neodymium or something, you're going to have to pay the price whatever China demands. And if they decide they don't like you, they won't sell it to you. That's already happened once when there was a fishing incident between China and Japan, and China just stopped selling rare earths to Japan until Japan realized that they weren't going to have any more elements to build their cars with, so they made nice. Anyway, this is all the holistic picture of the way I view the market. You can't just say, what stock should I buy, and then not think about anything else in terms of timing or areas in which to invest.
How hot are cannabis stocks, and is that a good investment?
Oh, I think they're going to be a great investment. In my annual forecast issue, I came out with some very bold predictions. I mean, I guess I specialize in those. But one of them is that there's a difference between cannabis and hard drugs that is still confusing the authorities. First of all, people take drugs no matter what you do. They can't be stopped. And I think that's been proved. And it starts with alcohol, liquor, in the 1920s and 30s. The anti-alcohol factors, the anti-alcohol factions did everything they could to stop it. They put it in the Constitution, and they banned it and blocked it, but it went through. And Joe Kennedy, John F. Kennedy's father, made his money as a bootlegger. So you can't stop people from doing these things. It just doesn't work. However, my theory is that pot is going to be the way to cure the opioid epidemic. Before you start screaming at me, here's my thinking. Somebody who either wants some alcohol or heroin or tobacco is going to look at the price of a joint, which could be, I don't know, a matter of pennies once competition hits. And I think they're going to favor that. The consequences for smoking cannabis or what have you are nowhere near as deleterious as they are for the hard drugs. And let me make clear, I'm not promoting anything. I don't smoke anything, and I think I have a personal reason for not smoking anything, and I wouldn't smoke tobacco or kelp or pot or anything. It's bad for your lungs, and you're going to wind up with a risk of lung cancer, and it's not funny. And but I think you're going to start seeing that the producers of those three so-called sin drugs, alcohol, cigarettes, and what was the third one? Anyway, are going to be getting into the pot business big time. And that was an old prediction of mine. And just last year, Constellation Corp, the liquor company, put $200 million into our Cannabis, which is my premier recommendation, and we made a great deal of money on that one. And that they would put that much money in, knowing that it's still illegal at the federal level in America, but not the local level. And the definition of an erotic is somebody who can believe opposites at the same time, and which is, of course, rejected in formal logic as prima facie evidence of error. However, I think that pot has a great future. I think cigarettes will eventually fall back on the wayside. Other predictions I made in the letter, there are a bunch of them, I can't remember them all, that the government would take over the pot industry and then give it free to those who behave. There's a whole bunch of things coming down the line, and I know what I was going to say. While I'm adamantly against smoking, I think that the so-called edibles are also risky, and that is because the amount of the potency in each one is concealed, and you don't really know what you're taking. I think eventually they're going to wind up with these pills with very precise administration, and people can know exactly how much they can take or handle without getting paranoid or losing control of a car. But I think those decisions are all yet ahead, and Canada's way ahead of America on this. That's one way to get ahead, I guess, if you're into head stocks.
Well, you're right about the medical things. A friend of mine was prescribed by his doctor cannabis pills that have a precise amount of active ingredients.
Yeah, I agree. Oh, I know what I was going to say. I also have a very high... Oh, yeah, this is big. I also feel that these creams... Here, I heard all this stuff about, it's good to relieve your pain. Some of those pains actually work. Some of those creams actually work to minimize pain. And I think wait until the drug companies get hold of this, so it won't just be alcohol and tobacco. I think you're going to see also the pharmaceuticals go into this. I think pot is going to be big. I would make sure, and they're on a temporary downer here now. I'm watching them closely to go back into some of the things we sold.
Do you think cryptocurrencies are here to stay?
Absolutely. I think you're going to see some of them with a real function continue. I think Bitcoin Cash is one of them, but there are others. There are 5 I pick in my newsletter, and but they're down. They're in a downtrend now. I'm waiting for another entry point, and that's why you should have cash and wait here. Thanks.
Mr. Dines, how can people find out more about the Dines letter?
Well, it's pretty infamous. You can probably ask most people who'll tell you. But, just check our website. If you like the way I talk, you'll probably like the way I write. And it's dinesletter.com, D-I-N-E-S.
Thank you so much for being on This Week in Money.
Oh, it was fun. I enjoyed it. I just rambled a little bit. I hope you don't mind.
My guest has been Mr. James Dines, founder of the Dines Letter, online at dinesletter.com. He was speaking to us from San Francisco. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark and Mr. James Dines, and thank you for listening. Plus, at the end of the show, we'll have company showcase updates from Larry Reaugh, the CEO and president of American Manganese, and Don Mosher from Cypress Development. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
My guest is Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Glad to be here, Jim.
Larry, you have a new news release. Can you tell us about it?
We put out a news release this morning about the manganese project we have down at Artillery Peak. Now, in the last few months, there's been a lot of buzz about manganese. And, of course, for the lithium-ion batteries. Lithium manganese was one of the first batteries that was developed for EVs. And it looks like the movement's going back towards manganese. And so I'm getting all kinds of questions and everything like that, and I just thought I'd clear the air and, and let people know that it's a really, in order to get excited about a metal, you have to be able to make money on it. And at the current prices of manganese, you can't make money. They're well below our pre-feasibility study break-even points, are actually below even paying for the operating. So China has a lot of overcapacity in both those elements, electrolytic manganese dioxide, EMD, electrolytic manganese metal, EMM, and they have overcapacity that is really polluting the market, not polluting it, but I guess it would be a form of pollution, but it's certainly a form of dilution when it comes to demand. We had a few things to say about that. I think that manganese will come back on. It's one of the top critical metals that Trump has recently brought to our attention, and certainly doing a favor for the mining industry. And I have to say that as far as I know, and the U.S. has low-grade deposits. The only company with a process to address that is American Manganese, Inc., and it was proven, and it was actually vetted through Tetra Tech, who did the pre-feasibility study. And I think that if something drastic happened in the manganese market, or in the world market politically, or in the case of war or something like that, that the table could shift and we could be doing some sort of a deal where we could get cobalt to the U.S. Army, or the U.S. market for that matter. Not cobalt, but manganese. So we have, what I've done is I've just let the shareholders know that we're holding the project. The most valuable part of it is the process, because none of the U.S. deposits are worth anything unless they have that process. So we're in a good spot. We're in a real good spot, but we're moving ahead with the recycling. And why are we doing that? Well, when we first got involved in looking at the recycling market, cobalt was $10,000 a ton. Today, it's $87,200 a tonne, just within scratching distance of $100,000 a tonne. We thought it was a great project at $10,000 a tonne, so you can imagine what we think of it now at $87,200. I mean, the economics just keep going up and up and up and up. Now, you're seeing lots of stuff on cobalt, and I always like to address that. One of the things pushing the price up, I think, is a deal that Glencore did with GEM out of China, where they're going to get something like 58,000 tons over the next 3 years of Glencore's production. And we don't know the details of that, but probably it's going to be on some sort of a moving scale, because since they even announced the deal, the price of cobalt's up a couple of $1,000 a ton. So that takes a lot of cobalt away from the Western market. And so that's going to squeeze the cobalt supply even more. So you're starting to see that reflected. There's guys out there that are talking about cobalt going down and being an oversupply. For the life of me, I can't see where that's coming from. We all know, what could be on the plate for production. Certainly it's not enough to meet the demands of the yearly demands, and it's a long ways away from ever being in realization, including our recycling. Our recycling is probably the closest way to production that you're going to see. But the cobalt market is definitely ruling the production of EV cars right now. I did say that we'll be seeing reductions and substitutions in the chemistries of the batteries, where you're going to use less cobalt and probably more nickel, manganese, those types of elements that have already been in the batteries, but on lower concentrations when it comes to cobalt. But is that going to make a difference when you're doing tens of millions of EV cars a year, EV batteries? Not really. I mean, there's still going to be a big, huge push on cobalt. Is that going to affect the handheld devices where the price goes from $50,000 to $100,000 a ton E? What's that mean to the price of an iPhone or something like that? A few dollars, maybe? And so, it's not going to affect that type of a market, except, trying to get the supply. So cobalt's still going to be heavily used in certain parts of the industry, and there's other industries out there where they need the cobalt. So I don't see any collapse of the cobalt market, not in the near future anyway. There's going to have to be some developments out there that you can track that would indicate that, hey, cobalt could, the price could be cut in half here in the next year. But I'm not seeing that. I think we're in a real good position. All of this stuff is great for us. Even somebody came out and said that by 2050 there won't be any more EV cars. All that works in our favor.
Where are you guys traded, and how can people find it?
Well, the American Manganese is traded on the TSX Venture Exchange under the symbol AMY. Traded in the U.S. under the symbol AMYZF. It's traded on the Frankfurt Exchange under the symbol 2AM. People can do due diligence on us and find a lot of information on our website, AmericanManganeseInc.com. They can phone the office and talk to me at 778-574-4444. Send me an email at LREAUGH@AMYMN.com.
Larry, thanks for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. We were speaking on March 16th. I'm Jim Gondry.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
My guest is Don Mosher. He's the corporate consultant for Cypress Development. Welcome to the show, Don.
Thank you. It's a great pleasure of mine to speak to you again.
Don, it sounds like you've got some pretty interesting developments for Cypress, and one of them is very unique.
Yeah. The project itself is looking at lithium contained in what's called a claystone. The only production in the world currently comes out of either brines or hard rock spodumene deposits. And the only comparables to what we have in Cypress would be what Lithium Americas has in Kings Valley in northern Nevada, and there was a lot of money spent there on an old Chevron deposit. But that claystone has what's called a hectorite component to it, and as a result of it, the clay binds with the lithium, and you actually have to roast it to get it out. So they have to go through a process of heating the clay up to 1,000 degrees centigrade, and then milling it, and then leaching it. So the costs are huge, and you end up with a bottleneck at the roasting spot. There's a company down in Mexico called Bacanora that's moving towards commercial production, but my understanding is they also have a hectorite component. So it's going to be interesting to see how they do it, although with lithium trading at about $14,000 a ton, maybe there's enough money there for them to deal with it. So other than that, there's an Australian company called Global Geosciences about 25 miles from us. They've got a deposit that's lithium and boron, about 35% boron. So it's a slightly different rock than ours, but it appears that it's heap leachable. We talked to them at PDAC, and they're moving towards feasibility on it. And then you have Cypress Resources that has been working on this project for about 12 months. Nobody that I'm aware of had ever looked at it previously, and I control a large land package in Clayton Valley going back to 2009 and 2010, and we never looked at it. We just looked at the brines, because that's where Rockwell, now Albemarle, has had their brine production for about 60 years. They were the original lithium brine producer in the world.
With this kind of unique development, Don, what kind of opportunities does it give you?
You know, what's so attractive about this is, number one, size. So our CEO is a fellow named Dr. Bill Willoughby. He's a mining engineer and metallurgist, and he came to the company because he was looking at the drill holes and got a concept for how big this thing was. I don't want to be throwing out numbers because we'll be coming out with a 43101 compliant inferred resource on it. But the deposit is 7 kilometers long, 1.5 to 2 kilometers in width. It's flat lying on surface, and it's about 100 meters thick. It runs 700 to 1700 ppm lithium. The second thing about it is the geometry, other than the size. It being a flat-lying deposit, basically with a zero strip ratio on it, when you combine size with something that's flat-lying right at surface, it overcomes a lot of potential challenges out there. The third thing is the processing potential. This thing appears to leach out like a copper oxide, which has been a long-time technology in the copper space. With our tests on this, a 10% sulfuric acid solution at 50 degrees centigrade gets out 80% of the lithium in 4 hours. So if you compare that to what they're dealing with the brines and evaporation ponds, they're very weather dependent. You'll be looking at anywhere from, call it 12 to 24 months to evaporate the brines down to a point where you can pull them out and work on the lithium in solution. With us, if we're able to do this in a vat leach scenario, we're not going to be weather dependent. We won't have a bottleneck where you're having to leave your brines sitting out in the sun for months at a time. We'll be taking this from the claystone deposit, mill it, put it in a vat scenario, pull the solution out in 4 hours, and we'll be selling the solution if we don't have some sort of a membrane technology where we actually take it to lithium carbonate.
Where exactly is all this taking place?
Well, that was the third component I was going to bring up that makes it incredibly favorable. The jurisdiction is Nevada, which is where Tesla has their big battery manufacturing plant. So Tesla's got a mandate to buy domestic product. The state of Nevada is a mining state. It's always been very friendly to mining. This is traditional mining where it would be an open pit into a tailings pond. And the final part of this is the presidential policy that Mr. Trump has put in place. Basically, he's focused on 35 metals that he feels they need to increase domestic production of. Lithium is one of them. They've got a very small brine operation producing lithium right next door to us, but that's the only lithium production in the U.S. So everything about this deposit is incredibly favorable. It's becoming an engineering project is what it's going to be. I mean, it appears that it's an old lake bed, so you drill it like a potash deposit, and each hole has a massive area of influence, just like with potash, which were old seabeds. In a potash deposit, each hole has about a 1 mile area of influence. So you don't need to drill a lot of holes for an engineering firm to give you a compliant resource on it. And, we'll have drilled about 18 holes into this, and we've basically drilled off the entire resource to inferred level, so your costs are much reduced. It becomes an engineering project after you get the inferred resource in place.
Don, whereabouts is Cypress traded and under what symbols?
So we trade mostly in Toronto on the Venture Exchange. The symbol is CYP. We've got a Frankfurt listing, which is C1Z1. And down in the States, we've got a clearing symbol on the OTC pink sheets, which is CYP.V, which is basically for clearing purposes.
And if people wanted to get more information about Cypress, where should they go?
The Cypress Development website will have our corporate presentation on it, all the structure, board members, all the rest of the management aspect that you need to look at. Right now, there's about 55 million shares outstanding and just under 80 million fully diluted. So our market cap on this is running about $13 million. As we develop this thing forward, I think we're going to get some recognition on how special this really is.
Don, thank you so much for chatting with us.
My pleasure.
My guest has been Don Mosher. He's the corporate consultant for Cypress Development. I'm Jim Goddard. We were speaking on March 13th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.